Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, and we're at the 11th of December, 2023. So, cosmic, what is that? Well, what if I told you that McDonald's has launched a new restaurant? They were wrapped around in Chicago, 2 blocks deep, trying to get into this place. What it's about, now I'll mention it because we're going to come to it in a minute here, is think of drinks, coffee. Do you ever go and get smoothies, a smoothie type drink, juice drinks, Red Bull type drinks, all that in one place to take on the likes of, in my opinion, Starbucks and Dunkin' Donuts. They're even going to have the center of donuts and a few things. What if I tell you it is a McDonald's with the arches with not a hamburger in it? Whole different concept they're coming out with. This is the first one in our area. I understand there's 10 of them around the country now opening. And these are the pilots to see, does this work? Because this is a new branch out. The people that have gone in, it's been good reviews. I can tell you that's people have said they like the blueberry taste and some of the others. So we'll see. You know, everybody wants to be the first. I remember as a kid, I couldn't wait to go to the first McDonald's. In Chicago is where this all began. And then they opened one up, it was in one of the suburbs, and we went there, and I remember we sold 1 million hamburgers. Whoa, 1 million, can you imagine that? And they kept changing the numbers, and you watched it. That finally came down. I think they just closed the original one in Des Plaines and redid it. But, and it was Des Plaines, Illinois. But what an idea, all from, milkshakes. Wow, pretty crazy. And that's what he was doing. So we'll get to that in a minute. Right now, your stock market came up again. I told you I expected churning up until we get to these reports. So now you get all the reports. CPI tomorrow, FOMC date on Wednesday, and then boy, you got 4 central banks telling you what their monetary policies are going to be come Thursday morning. So this is a big time. Once these are done, yeah, we'll get the rest of the normal reports, but these are the big boys, and it sets you up right into Christmas. So think of it that way. I can't wait for it. I'm all excited about what it's going to do. Lucid, by the way, let me come back to that for just a minute here. The CFO left. So why? I always wonder about that when you see these things. Rivian, not going anywhere. Most of the auto stocks didn't really do anything one way or the other, including our big one. Tesla, NVIDIA down another $8 today. There was Amazon down, and I wanted Amazon down. I loved it when it fell into under 144 today. I'm bullish. So I'm looking for these markets to come down and like a running start. And then as the buying and Christmas buying is going on, I'm watching in my neighborhood where I live, a lot of boxes coming from Amazon. So things are going on already. So here's MCD. And what the market's done is a bit of a congestion play to see how this is going to play out. Today, as this rolled out and everybody gets to see it, up 1.27%, $3 on that. As we step over right here to their swing line, higher lows, higher highs, bullish. The next one we get here is the moving averages. So what you had is you had a bullish crossover take place about 4 days ago where the 18-day average in red got over this gray line, which is the 200-day average. They're not lined up in a classic bull mode. Normally you'd have in a real bullish mode in 18 over the 100 over the 200. You're not in that type of mode at all, but it is still a bullish pattern, saying to me at least that the probability of getting to 291.44, about another $2.50, probably a good probability to get up there. On breaks, supports around 282 from this level, and you've had an embedded reading, which makes me super bullish in this market. Whenever I get this, and you can see how this worked out, once you got back over and right through here, you came in, fought a battle, got over the 18-day average of closes, embedded. That was the ball game. Just kept going on, and away you go. It's been a beautiful play. Darden Restaurants, very similar if you think about what I'm saying here. Why? Because if you thought about Darden and McDonald's, the students were supposed to have no money. They were paying their loans, the ex-students, loan payments. Oh, they got to pay off everything. They're going to have no money. Well, did you look at Darden stock? You're looking at McDonald's? They got plenty of money. Now, what we're doing here in Rivian is we're pushing on the Bollinger Band, trying to drive it up. This is not a run in this. This is a market that is grinding away higher. It'll have trouble, I think, between here and the 2050 area, the 100-day average. It's already overbought. Support will come back in around the 1796 level, about $1 lower for the 200-day moving average of closes. In UGA, everything with energy is in basic trouble. I don't know if you looked at that COP28, how they're trying to deal with fossil fuels. Here's how they're going to deal with it. They're not. You're never going to get the Mideastern countries to come in and say, let's drive them out of business. In fact, OPEC over the weekend told all their members, don't you dare vote for that. Rightly so from their point of view. And everything's about point of view. Does that mean that there won't be initiatives to get further along and use less and less of it? Of course there will be. And the greatest initiative we could use, honestly, is get the hybrid cars going. EV is wonderful. It's not ready in America. You don't have to agree with me. And I know one of you wise guys wrote, Tesla, boy, are you right. Don't get me wrong. But that's Tesla. One manufacturer brought it out, and anyone that wanted an electric car got it. That is not the same as me saying America is not ready for EVs. They're not. They're not showing that they want to be ready. How many stations, drive from Chicago to LA. Tell me on the road as you go how many EV charging stations you get. You're always looking at your thing. Where's the next one? What am I going to do? Now I got to kill 20, 30 minutes as the car is going to be charged up. Maybe I can do it overnight. I don't want to leave my car attached to that thing overnight. You go through all this. Whereas the hybrids, you get the best of both worlds. And I think that's where you're going to see the money go for a bit. That doesn't mean they'll let go of EVs, doesn't mean they won't get the batteries plants built and get the cost down on them. Then they'll do it. But somebody's got to come around and really make a national chain of the charging stations in a cheap price or swap of batteries. There's companies coming here that want to do that. That's been going on in, I believe it's Vietnam, there's in China, and Israel's had that for I don't know how many years, many, many years. Lower highs, lower lows, you can see how the market's coming down. XLF. We have a lower low, higher high, with the market fighting to get an embedded reading. It's not there yet. What do you think tomorrow's going to be? Everything to this type of market. It's not what the Fed chair is going to say or the statement. I hope you appreciate what I'm saying here. It's going to be the dot plot. Everybody's going to be pouring over the dot plot. What are these 12 members saying? Where do they see the rates? When are those cuts going to begin? Where are they seeing what? That's what you want to get. We certainly want to hear what the Fed thinks of inflation. How's the fight going? What are they going to say on tomorrow's CPI number? That's going to be important because they get it the day after, so they get to see it. They'll be asked questions. As long as tomorrow's number falls within a normal realm, won't get a lot of attention, but a question has to be asked. How do you get the core CPI to keep falling? And that's because the Fed's going to say they got their foot where? In restrictive territory. They're not putting the pedal to the metal. But what they are doing is they're also not hitting the brake. And that's what you're going to see. That's what I think you're going to see at least. XLI, the industrial sector, up and away. The market is, in this particular part of it, the market might be getting a little bit ahead of itself. You got to be very careful. My chart work is not saying that. If you throw this off, I'd say this is still a very bullish chart. But knowing that this is industrial, knowing that the market is counting that those interest rates are going to fall in the economies, this Goldilocks scenario where the Fed doesn't have to get and stay overly restrictive because inflation's falling on its own. And in terms of unemployment, you're already at full unemployment. They've done their job there. But when you get to Bollinger Bands, you got to learn to take money off the table is what I always teach people. I've told you I thought the $7 mark in AMC is going to be a battleground. How in the money I wish I can go on The Price is Right or one of those things. That was a pretty good call. That's what I thought the market was going to do. And I'm not impressed with the movie slate that we have coming up for Christmas, so maybe I'll be wrong. I hope I'm wrong. I want these chains to do well. We need movie theaters. There's nothing like when a good movie comes out, seeing it on the big screen. And no matter how they make our screens, 70 inches, 80 inches, it's not the same, folks. You know it's not the same. RSPD, look at how this just keeps going. So this market is saying the consumer is not only okay, he's super strong. And until you get a correction, you don't have it. Now you hit the Bollinger Band. What you're supposed to do, the way I teach trading, is you peel off positions against it. You buy when you're embedded under it. There's a way to do it in my course. It's on the website under education, iraepstein.com under education. XHB, look at the housing. You know what this is about. This is about interest rates. It's one thing. Are they going to get mortgages? Can we crack 7%? That's going to be a beautiful thing. If something like that can happen, more and more demands will come out. And can you imagine if you're under 7 come spring? Now you'll say, Ira, it's not even winter yet. What are you talking spring? And you are right. December 21st is winter. But the first day of winter, I start thinking spring. Otherwise, you go crazy. Chicago's a terrible place to visit in the winter. It's got gray skies. It's gorgeous. Spring, summertime, fall. One time, I hate the gray skies. I get depressed here. XLE, higher high, lower low, oversold, no trend. Energy's under a real problem because OPEC is trying to hold together the group to see if they will, number one, stick in wording. Number two, will they follow through? I think the follow through is not going to happen. I think they're, as a group, they're each man for their own. That's what I believe right now. Then we get to the gold market. Now, the pain of the market is that day that the market got up to $21.52 and it is now down $150 from that high. So you're coming down here, but I'll tell you, I don't think I'd get overly bearish because the argument's still going to be, believe me, I believe I'm right at least, that what's going to happen here is we get through this FOMC and the other banks. If the dollar does start coming back down, inflation stays sticky, that's gold scenario. It'll come alive, especially if the economy starts picking up again, let's say the second quarter of the year. I don't know what it'll do the first quarter. We got to see what earnings look like. There's a lot of things that are going to happen there. In SLV, this is the area where I think you're going to bottom out again. We'll see if I'm right or wrong. But this decline is monster in scope. It's a 10% decline, probably getting itself overdone. In the copper market, you're betting on China. Which way is that going to go? Which way are the world economies going to go? What's the FOMC and the other banks? In other words, all the monetary policies this week getting set. You want to avoid that. Let it come out and you'll play with it then. Same in TLT and BND. Now TLT, going in on the close today, my work said on a daily chart the first time, got to be out of all your longs. Doesn't mean it can't be a false signal and come back up. But when I see it close under 79, I tell and teach. You do that for a reason that's in the enhanced course. By the way, what I teach in my courses, every morning when I put out my Spider ETF video, I reinforce that. I don't know if you're aware of that. I mean, I really reinforce it. I love to teach, love to show what it is. And it's easy when you're looking at it. And I do believe that. Once you learn the technique, it's easy to see it. Does everything work all the time? Of course not. Nobody walks on water. No technique is going to be ironclad that I've ever run into. It's going to work 100% of the time. If you're looking for that, don't waste your time. Nobody's got it but you. And then you should be the richest guy in the world. But your technique might be to make you no loser, you never trade. Okay. Higher lows, higher highs, come up there. Every trader has losses. Difference between winners and losers is how do you take your loss, how do you keep them small, get your winners, and let them run. Take a look at FXE. Okay, you know what's going on. This is the area that I'm telling my traders, no, now you walk away from the short side of this market, you walk away from the long side of UUP, you go into this full belly, you got your breakfast done, you're ready to do things, and that's where we go. So tomorrow, if you tune in with me, you're going to see me talking about, obviously, the first thing is the CPI, and then on Wednesday morning, nothing. We'd be waiting for 1 o'clock for the Fed announcement, and then the 1:30 press conference. And remember, the yin-yang that happens. By the time Fed chair is talking, Asia, they're going to bed. Europe's already out to dinner. It's late time there, and then it goes around the world. My trade ideas, I give them each morning to my subscribers. Specific, buy and sell. I have here 35. This is old. We're 40 to sometimes 45 charts in the morning. I'll do a mixture of daily, specifically Monday through Thursday, weekends, weekly, but I'm always mixing in the weekly because if we're throwing out a rec, what does the weekly chart look like? Is it fighting it? These will change on you all the time. With your help, I rotate them. I'll move around the different spider ETFs. I go where the interest is in the market all the time. So how do you get this? It's simple. You go to our website. It's an introductory price, $16 for every 30 days after your intro of $8.95. You give it a try. It's for you or it isn't. Go to McDonald's, order a big drink. Tell me what you're going to pay. It's going to be in that with your tip. I don't need the tip. Try this. It's 22 days of videos, and you're going to get videos. I'm thinking it out loud to myself. Probably 6 days a week. That's a lot. Each one about 15 minutes long. And in the bottom of each one, if you go to the website, it tells you what section you're in. Are you in the metals? Are you in the energies? Are you in the stock section? So you can scoot around. IraEpstein.com under the keyword education. You can't miss. I have to take that back. For these, this is research. Research. That's where you want to go. IraEpstein.com research. The education is the Bollinger Band. I'm Ira. You have a great day.